Economists warn that the budget may trigger further interest rate rises. Healthcare, real estate and retail stocks win out of Tuesday night's policy announcements, and soon you can rent a bed by the hour on long-haul flights to the US. It's Thursday, the 11th of May, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Oh, Michael, I'm slightly uncomfortable by that introduction. Not of me, of the stories, particularly that third one, anyway.
Oh, the third one, it's laced with innuendo, and I fear for us getting through that story, Sean.
Yeah, could be a long show.
It's coming up later. That'll hook people through. Sean, it's worth sticking around for that. It's also worth sticking around for your interview afterwards. A very serious interview with Doug Nixon from EY, all about banking.
Yeah, so he's basically the lead of their banking business. And Doug talks about the results of the big four banks. We had three in the past couple of weeks, and then Commonwealth Bank 4 months ago or so. He puts all the numbers together to tell us how the banking sector is going. It's a fascinating chat just about the banks themselves, but also if you're an investor and you're investing in banks, and most of us do through our super funds, it's well worth a listen.
Yeah, it's a cracker. It is coming up later on. The main story this morning, though, Sean, there's been both plaudits and criticism of the government's budget on Tuesday night. Generally, it seems to have been pretty well received.
Yeah, that's right. Though, of course, the government can't satisfy everyone. Opposition leader Peter Dutton, he wasn't satisfied. No surprises there. Of course, tonight he'll outline the coalition's response, but he said the government should acknowledge that it inherited a good set of figures from the coalition. Greens leader Adam Bandt, who, of course, holds the balance of power in Parliament, at least in the Senate, said the increase to JobSeeker announced in the budget, $2.80 per day, isn't enough to buy bread, and accused Labor of betraying everyone doing it tough. He was supported by Australian Council of Social Service boss Cassandra Goldie, who said the increase to JobSeeker and other assistance payments announced on Tuesday night weren't enough to help those on the poverty line. Funnily enough, Business Council of Australia Chief Executive Jennifer Westcott gave her support, particularly to the surplus, the increase in welfare payments and the tax incentives for build-to-rent projects. The Grattan Institute's Chief Executive Danielle Wood said the Albanese government had done relatively well in designing a budget that delivers cost of living relief while containing its impact on inflation. So, funny thing that we ended up having the business community liking the budget and the not-for-profit area generally not liking the budget.
Not liking the Labor budget. Wow. Then, Sean, market economists who have estimated that the government is adding about kind of $21 billion to the economy reckon the budget could now put pressure on the Reserve Bank to lift interest rates.
Well, the government says Treasury advice suggests the budget's cost of living package will actually ease inflation pressures. Not everyone agrees. Goldman Sachs chief economist Andrew Boak isn't so sure. He said the $20.6 billion in net spending raises the risk of further rate rises. The government's made an injection of net $44 billion into the economy over the course of its first two budgets. That includes nearly $10 billion in the October budget, $13.4 billion for the 15% pay rise for low-paid aged care workers. That's in that as well. Now, Tuesday night's budget, of course, included nearly $5 billion to increase unemployment benefits, $2.7 billion for rent assistance, $1.5 billion for the federal government's contribution to energy bill subsidies.
Sure. Before you go on, Sean, can you explain that to me? The Treasury advice, according to the government, saying that the cost of living package will ease inflation pressures. Do they just mean in terms of ease pressures on households that have been caused by rising inflation, or do they mean actually ease pressure on inflation itself?
Both in a sense, because the package is very tailored to energy and rent. Well, that's two of the things it's tailored to. Now, they are big triggers for inflation in Australia. So if you can take the oomph out of those price rises, not only do individuals' households benefit, but inflation should also decrease. What the economists are saying, that's all well and good, but overall you're spending more money, net $44 billion, if you include the October budget, if you include the aged care money. So how can you say it's deflationary, or at least not adding to inflation, when you're spending more money? That's kind of the point of it. Like BetaShares chief economist David Bassanese yesterday, he said it was unambiguously expansionary. and adds to the risk that the Reserve Bank will need to raise rates at least once or possibly twice. UBS chief economist George Faranow, he said that $12 billion in additional government policy decisions next financial year equates to a stimulus of about 0.5% of economic growth. Our own Sherelle Murphy, well, she's not our own, but she's such a friend of the show, EY's chief economist, Sherelle Murphy, said federal government spending was making up an increased share of the economy, contributing to inflationary pressures. Of course, Michael, this is all at the time when the Reserve Bank is trying to slow the economy and inflation by lifting interest rates. So Jim Chalmers yesterday came out and said it wasn't inflationary. I'm afraid the market economists don't agree with him.
Yeah, and well, we'll see. Would we see this in the next meeting of the Reserve Bank Board, or would it actually take potentially a couple of meetings for it to kind of flow through and them to potentially take action?
The payments don't flow through. Mostly they don't flow through till July 1. So it's unlikely that the board will sit there and look at the budget and say, net $44 billion, we better increase interest rates. I don't think that's how it works. I think it is down the line, if those payments are being spent, putting pressure on prices, inflation's rising, or at least it's not falling anymore, that's when you'll see the Reserve Bank take action.
Okay, all right. Local markets, what happened yesterday?
Well, the budget was very much front and centre of discussions. A few notes were released by investment analysts about which are the stocks to benefit most from Tuesday night. Generally, I'd say retailers, healthcare and real estate stocks skewed towards low-income earners are the three sectors of the share market set to get a boost, according to analysts. Worth going through some of those. UBS strategist Richard Shellback said Domino's Pizza, Coles, Wesfarmers, because of Kmart, and Super Retail Group could win among the retailers thanks to the cost of living packages. Building material suppliers CSR and Boral, and developers Stockland and Mirvac, along with companies like Domain and REA Group, they could all benefit from government's assistance to first home buyers. And RBC analysts said Sonic Healthcare, Healius and Capital Health could win indirectly thanks to the additional funding for Medicare. The boost to net migration would help some of the other healthcare companies, places like Estia Health, Regis Healthcare and Ramsay Healthcare. This has been a long-winded answer to your question, though, Michael. So back to the market.
It's been a very enjoyable journey. It's actually nice to hear all of these names. It kind of puts a bit of kind of context around the impact of the budget.
Yeah, I mean, some of those stocks did really well yesterday as a result of it. So there, is a tangible benefit to some of them. As far as the overall market, it closed slightly lower yesterday at 7,256 points. The banks were actually among the worst performers. Bank of Queensland was the worst of the top 200, down 4.4%. National Australia Bank, I think, was the third worst. It was off 4%. BlueScope Steel was another poor performer, falling 3.7%, while CSL was up 1.3%. Best performers were definitely the healthcare and real estate investment trusts. In corporate news, software group Appen's share price fell about 27% yesterday after it warned that it expects revenue to decline materially this financial year compared to 2022. And enterprise software business Technology One went into a trading halt after detecting an unauthorized third party acting illegally, accessing its internal Microsoft 365 back office system.
Oh, that sounds a bit worrying.
It does.
International markets, what's happening there?
Well, plenty going on in the US with inflation figures out and growing concerns about the US defaulting. Now, President Joe Biden and congressional Republicans have made little tangible progress on averting a breach of the legislated debt ceiling. If there's no deal by June 1, the US risks being unable to meet all of its payment obligations. In commodity markets, oil was lower, as was gold, and Michael, the Aussie dollar is buying about 67.7 US cents.
It is a big week.
Massive week.
It's hard to believe that it's only Thursday. It feels like it's about next Tuesday by now. There's just so much to discuss. We've actually got plenty more coming up. We'll be back in a moment with the rest of the day's business news. Sean, the boss of building products group CSR has given an upbeat assessment for the sector, saying there's still a backlog of homes to be built and that will cushion any downturn in the industry.
Julie Coates said the pipeline of 110,000 detached houses still to be built is about 50% higher than historical averages, and the backlog could drag on to the end of this year. It's essentially due to tradie shortages. That's the bottom line. Coates was speaking after announcing a 20% jump in pre-tax profit. Revenue was up 14%, mostly reflecting price increases. Remember, CSR makes things like gyprock, plasterboard, bricks and pavers, Monia roofing, Hebel lightweight building blocks, and Bradford insulation. All things I'm getting to know very well as we renovate our house. I'm very interested in CSR, I've got to say. Its final dividend also jumped 11%. Its share price closed down 2.7% to $5.32.
It has been a very long time, Sean, since I've had cause to dust off your old nickname. Do you remember what it was? It was Checkout. Sean Checkout Aylmer, because
self-serving.
It's all about the self-service here, and suddenly you find little stories about home renovations and the backlog in building and the shortage of tradies kind of sneaking on up the priority list.
I'm contributing quite a bit to CSR's profit, I would like to say.
And you demand acknowledgement.
More than I thought I would anyway.
And over a longer time period?
Yeah. That's all right, though. Love our builders. Great people.
And that's also to be expected, I think.
Definitely. Go Pete, go James, go Luke. They're the builders.
Trying to dig your way out of a hole here now, aren't you?
Yep.
Virgin Australia's shareholders, Sean, led by US private equity giant Bain Capital, will pocket a $730 million capital return from the airline. And Chairman Ryan Cotton has assured staff that planning for its float is, quote, well advanced.
Yes, now nearly all of Virgin's 7,000 employees will get some form of bonus as it approaches its first full-year profit in a decade, according to a report in the Financial Review. It's in advanced stages of a separate return of capital to shareholders, is how Mr. Cotton put it in a staff email yesterday. The $730 million that will be returned to the airline shareholders is about equal to the equity injected into Virgin when it left administration in 2020. Now, the total cost from memory was certainly over $3 billion. I think it was $3.3 billion, but that included debt. So the only money that actually came up, they took on the liability, obviously, but upfront was about this amount of money. Bain Capital owns 93% of the airline. Virgin Group owns 5%. Queensland Investment Corp owns 2%. Pretty good return so far.
Yeah, not too bad at all. Now, Sean, a couple of COVID darling stocks have really fallen on hard times. Bubs Australia is one of them. Yesterday, the board terminated the employment of its chief executive, Christy Carr, effective immediately.
Now, remember, Ms. Carr was pictured with Joe Biden after there was a shortage of infant formula in the US during COVID. Bubs stepped in, filled the gap. Great photo.
That was an extraordinary story when that happened.
Amazing. Joe Biden saying they'd sort of, saved the world. Not quite, but...
It was Bubs to the rescue, I think, was the headline.
Yes. Yeah. Incredible. Well, times have really changed, shall we say. Now, the reason given for her sacking yesterday was simply failure to comply with reasonable board directions. Now, the former chairman, Dennis Lin's employment with Bubs was also terminated with immediate effect. Both Lin and Carr have worked together for a while. Last month, Lin was actually replaced as chair by Katrina Rathie. In a statement, the group said, given the deterioration in Bubs' financial performance, it was time for a change in leadership. Whack. Bubs' share price peaked pre-COVID at $1.39. It's now worth about 18 cents.
Wow. Another COVID favourite, Sean, that's struggling is online marketplace Redbubble.
It will cut nearly a quarter of its staff as it works to save money and restore itself to profitability. Redbubble's share price has gone from more than $7 in early January 2021 to about 42 cents. After the cuts announced yesterday by returning Chief Executive Martin Hosking, the group will have lost 37% of its staff since the beginning of the year. Martin Hosking, of course, is the co-founder and the largest shareholder in the company.
Now, Sean, spare a thought for the Northern Territory, because the federal budget wasn't the only one announced on Tuesday. The Northern Territory's budget was also released, but it kind of got a little bit overshadowed, wouldn't you say?
I would say so.
And considering that the Northern Territory actually had some pretty good news, saying that they'll hit a surplus within 3 years thanks to GST revenue and mining royalties.
Some ways structurally more sound than the federal budget, dare I say. Now, Treasurer Eva Lawler forecast an operating surplus of $121 million by financial year 2025 and a fiscal surplus of $67 million by financial 2027. I reckon the feds would love it if they could say that. The recovery in the NT is somewhat overshadowed by an increased net debt of $9.23 billion, which will mainly be spent on long-term infrastructure projects, including money for roads, transport, housing, and in fact, record spending in justice and cost of living relief.
All right, turning to international news now. China says it will react strictly and strongly to any penalties imposed on its companies by the European Union for supplying Russia with so-called dual-use goods that can be used for both military and civilian purposes.
This is the pointy end of the acrimony between Europe and China at the moment. The EU's executive arm has proposed extending strict trade restrictions to several Chinese companies as it tries to crack down on firms supplying the Kremlin with banned goods and technologies that have aided its war in Ukraine. Asked about the prospect of sanctions, the Chinese foreign minister said China does not deliver any weapons to crisis nations or crisis regions. He then warned against disrupting what he called the normal exchange between Chinese and Russian companies.
Now, this one's been generating plenty of headlines, Sean. Donald Trump has been found liable for the sexual abuse of a journalist in a Manhattan department store in the 1990s, a significant legal defeat for the former US president as he mounts a third bid for the White House.
A 9-person jury deliberated for just a few hours before unanimously finding Trump liable for battery and defamation while clearing him of a separate claim of rape in a lawsuit brought by E. Jean Carroll, who's a former advice columnist and television presenter. According to the Financial Times, the jury awarded her a total of $5 million in damages. Now, in a statement, Carroll said, "Today the world finally knows the truth." Trump's response on social media was, "I have absolutely no idea who this woman is. This verdict is a disgrace, a continuation of the greatest witch hunt of all time." He later said he would appeal the verdict. Carroll first accused Trump of rape in a magazine article published in 2019 in which she alleged she had met him at Bergdorf Goodman's Fifth Avenue flagship store sometime in 1995 or 1996. She claimed that while helping Trump pick out a present, he led her to a dressing room where he pushed her against a wall and sexually assaulted her.
Finally, Sean, we mentioned this one at the top of the show. Air New Zealand, which last year began long-haul flights from Auckland to New York, are going to install and rent out bunk beds, which you can rent by the hour on flights.
Do I need to say any more?
I don't know. It's just it's marvelously suggestive, isn't it?
Marvelously suggestive, yeah. So basically, from next year, you can rent 4 or 6 hour sessions in the beds, which will be available for economy passengers for around 100 New Zealand dollars an hour.
I think we need to be wary of using the term sessions in the beds.
Not most of us, just you.
Okay, sorry, please go on.
They'll be available on Auckland to New York flights. Now, I took one of those last year. Mine was almost 17 hours. It was coming back, actually, New York to Auckland. So they are very, very long haul. They'll also be available on the Auckland to Chicago flights. They're only a touch shorter. The 6-bed pods, known as Sky Nest, S-K-Y-N-E-S, Sky Nest, cute, will each have a pillow, sheets and blanket, earplugs and a reading light. Now, passengers will be limited to 1 booking per flight and time limits will be strictly enforced. I loved Air New Zealand's statement yesterday. It said cabin crew will politely wake any passengers who sleep through.
I'm going to ask the obvious question here, Sean. When you say it's limited to 1 booking per flight and limited to kind of a specific stretch of time, is it also limited to one person?
I don't know the detail. Michael.
I think it's an important detail for people to know, Sean.
I
thought you were going to speculate further.
No, I'm not going to speculate at all.
It feels like it's an important story for us to draw attention to and then just move on.
Yep, exactly.
Now, up next is the Fear and Greed Daily interview, and you're speaking with Doug Nixon, Oceania banking and capital markets leader at EY.
Yes, all about the performance of the big 4 banks, particularly their profits through we've seen in the last couple of weeks, and then Commonwealth Bank about 4 months ago. Great chat with Doug about just how the banks are performing, really. It's not investment advice as such, but more about just how well they're doing.
It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. You know what I realised we didn't do yesterday, Sean? And it's logical because of the budget. We're a little bit distracted, but we haven't awarded a MEA, a Most Enthusiastic Advocate, MEA, which is basically a Fear and Greed superfan. We haven't awarded one for a few days.
Well, I've got one. In fact, the award actually goes to Lois, who is the daughter of Christian. Now, the story, Christian is a fan of Fear and Greed. He works in finance industry broadly. Anyway, he listens to Fear and Greed on his car as he's driving his daughter Lois to school, and it comes up on the dashboard. Now, the reason I know this is that Lois took a photo of it and sent it to a bunch of her friends, one of whom was my daughter. So she, of course, my daughter came and was laughing her head off saying, "Did you know that Christian listens to you in the morning?" So I'm going to give the Mia to Lois for spreading the word that a very, very sensible man like Christian listens to Fear and Greed.
Oh, that's fantastic.
Yeah.
And I'm assuming that Lois is going to hear this, and it makes me regret significantly the questions I asked during the Air New Zealand story. And I apologise to you, Christian, if there are any uncomfortable discussions.
They're old enough. That's okay.
Oh, good. Congratulations to both Christian and Lois, joint Mias. For this,
well done.
For today.
Yep.
Wonderful. All right. Thank you very much, Sean.
Thank you, Michael.
It's Thursday, the 11th of May, 2023. Make sure you're following the podcast. Join us online, of course, on LinkedIn, Instagram, Twitter, and Facebook, and stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, "Alexa, play the Fear and Greed podcast" to catch the latest episode. You can grab yours now at amazon.com.au. And Sean, I must not forget, tomorrow I need to tell you about how I've been playing around with Alexa, and you can actually get her to insult you. And it is a lot of fun.
Right. Fantastic.
Yes, it is very good fun. I will update you on that tomorrow. I'm sure you'll be hanging out for it. I'm Michael Thompson, and that was Fear and Greed. Have a great day.